You've saved £40,000. It's a fantastic milestone, but now comes the hard part. What do you actually do with it? If you put it into a savings account, inflation eats at it. If you're looking at property in London or in the southeast right now, you're probably seeing yields squeezed down to 3 or 4, even maybe a bit less or a bit more. You're working harder for less money. What if I told you that in 2026, £40,000 is all you need to enter a market that's currently one of the top performers for the entire UK? So in this video, I'm going to share the location and why it's performing very well and share examples of what £40,000 can do with an area like the North East. Let's look at the stats. Whilst the national average house price is hovering around £270,000 to £300,000, the North East is still accessible at an average house price for the region of about £165,000 to £180,000. And according to the latest ONS data for early 2026, the North East isn't just growing, it's leading. While London saw prices softening with a 1% decrease in prices, the North East hit 6.8% house price growth, whilst also experiencing a 7.9% increase in the average rents. So prices going up as well as yields. And I'll leave links to this data in the description below. Now with a 25% deposit on a £150,000 property, which is achievable in the North East, factor in legals and maybe some light work, £40,000 is an affordable entry budget to work with. And what's more, you aren't just getting a pokey flat, you're getting a high yielding freehold house. Let me show you a couple of examples of what £40,000 budget looks like for us and our inner circle clients. Property 1, here's some pictures of it. So the estimated end value is £90,000 and the purchase price that we secured this was £73,000, leaving it with an instant equity of £17,000. Now, in terms of actual capital employed, actual money invested, let's go into detail now. So the deposit came to £18,250. The buying costs like legal, stamp duty, etc. came to £9,648. And the refurb cost was only £1,000, and that was effectively compliance. And the total cash, when you add it all together, is £28,848. So that's the total cash that was acquired by a client. So let's now break down the returns. Now the gross rent, £695 to £725 per month. Now this is a real life example. Our client got more, but even if we go off the worst example of £695 per month, that generates a yield of 11.2%. And in terms of monthly costs, we're looking at factoring in a 5% interest only mortgage, which can vary based upon the financial situation of the client or you as an investor. Using 5%, the mortgage is £280 per month. Management at 10%, if we were would come to £70. Just rounding 10% of 695, just rounding it to the nearest whole number, we're using £70 here. And insurance, factoring in around £20 per month. This can increase, again, based on the personal situation of some investors. I've seen some investors with a lot higher premium because they've had a history of claiming the insurance, while some clients have a really low insurance because they haven't claimed. So using that as a baseline, the total monthly cost come to £318 per month, which when we put everything together, gross rent minus monthly costs, we're looking at a total net income of £377 per calendar month. Over the annual basis is £4,529 per annum. When we factor in the cash that they invested, just shy of £29,000 over the annual return of £4,529, we're looking at a return on capital employed of 15.7%, just on rental income return, not factoring capital appreciation, not even factoring the instant equity of the property, just a cash return investment. Now, let's go into property example 2. These are pictures of it. And now let's break down the numbers. So the estimated end value for this property, £110,000. There were actually properties going for £112,000, £120,000 as well. But just using 110 in this example, the purchase price that we secured for our client was £93,000, giving an instant equity of £17,000. Okay. Now, in terms of actual capital employed, it was bought with a mortgage, so it was a 25% deposit needed, which came to £23,250. Buying costs, factoring legal, stamp duty, mortgage fees, etc., came to £10,150. The refurb, very minimal because it was just compliance. As you can see from the pictures, hardly anything needed to be done. It was just about compliance of certificates, gas safety, EICRs, and a cleanup, coming to £1,000. And the total cash required, £34,400. Now, let's look at what the returns on that £34,400 is. Gross rent for this property, we were expecting £750 to around £800. Actually, it's rented for £850 per calendar month. But even if we go off what we thought was the worst case scenario, which was £750 per calendar month, that generates a yield of 9.5%. Now, the monthly costs using a 5% interest rate will come to £291 per month. The management fee at 10%, £75. Insurance, £20 per calendar month. Now, the mortgage and insurance can vary, as I said before, between investors based upon their credit history and their claim history as well. But using that as a baseline for our calculations, the total will then come to £386 per calendar month. Now, when we take the gross rent away from the monthly costs, we're looking at a net income and net rental income of £364 per calendar month, which annually is £4,373 per annum. Now, based upon the capital employed, based upon the net income, we're looking at a return of 12.7%, not factoring in again the price growth and instant equity, just based upon the raw, as of today, net income return. Really healthy. By the way, if you're looking to start or grow a property portfolio and have funds of £30,000 to £40,000 or more, click the link in the description and book a strategy call with me today. With major employers like the government relocating thousands to the northeast and the massive green energy transition across the region, the demand for high quality rental housing is at an all-time high. The secret is out. Institutional investors are moving in and prices are responding. For example, Lloyds Living, the rental arm of Lloyds Bank, the biggest buy-to-let UK lender, has started buying swathes of property across the northeast region. So if you have £40,000 sitting in your savings account or your bank account, it's being eroded by inflation, whilst in the northeast, it gives an engine for growth and wealth. Now, knowing you can invest in property with up to £40,000 is just part of the equation. One thing to be aware of is buying the wrong type of property. Watch this video where I share the type of properties to avoid.